and welcome back to Everything Sharjah. Today we're tackling a question that's on the minds of many real estate investors right now. What makes Sharjah's property market so steady even when the other markets are unpredictable? Let's explore what's really behind this stability. Dubai is fast, Abu Dhabi is powerful, but Sharjah is steady, especially when it comes to real estate. In a region known for rapid shifts and bold projects, Sharjah stands out for something rare, and that is consistency. So here's what really makes Sharjah's real estate market so stable, even when the global economy shakes. Balanced and controlled growth. Sharjah has never chased flashy growth. Instead, the emirate follows a long-term urban plan, approving projects based on real need and infrastructure. No overbuilding, no empty towers, just well-placed communities built with intention. End-user-driven market. Here's the big difference. Most buyers and renters in Sharjah are end users, not speculators. They live here, they work here, and also they raise their families here. That kind of demand is resilient because it isn't based on flipping or fast profits. It's based on life. Insulated from global fluctuations. Number one is that it's not an investor speculative market. Most property transactions in Sharjah are from end users and not from international speculators. That means people buy to live and not to flip. So the global market sentiment doesn't shake the local buyer behavior the way it might in cities with investor-heavy demand. And the fact is, the end users and Gulf-based residents make up the majority of Sharjah's real estate transactions, especially in residential areas like Muaila, Al Majaz, and Al Siyuf. Number two is that freehold is limited to specific zones. Sharjah's freehold property zones are limited and regulated, especially for non-GCC nationals. This naturally reduces the heavy foreign speculation and keeps property prices from becoming volatile or overexposed to global investors. And the fact is that most of Sharjah operates under leasehold or restricted ownership models, with selected zones like gated communities offering freehold options, creating a controlled ownership environment. Number three is that prices are tied to local economic realities. Because prices in Sharjah reflect local salary ranges and family budgets, they aren't inflated by international demand or foreign currency inflows. So when currencies fluctuate or the foreign market drops, Sharjah still stays grounded. And the fact is that the average property price per square foot in Sharjah is around 30 to 40% lower than that in Dubai, and the rents are aligned with the UAE's middle income earners. And number four is the high rental occupancy driven by regional demand. Even during global shutdowns, the Sharjah's rental market stayed strong because people live here and work in Dubai. That cross-emirate lifestyle drives steady, reliable rental demand, regardless of what's happening globally. And the fact is that Sharjah consistently maintains occupancy rates above 85% in key residential areas due to its affordability and proximity to Dubai. Affordability equals less volatility. Sharjah offers more space and comfort for your dirham, because the prices are grounded in affordability and there's less risk of market bubbles or dramatic crashes. It's a market designed to grow slowly and sustainably. Government vision and regulations. One of the major pillars behind Sharjah's real estate stability is strong government oversight and long-term vision. Unlike markets that rely heavily on private sector trends, Sharjah's growth is shaped from the top to down with urban development policies focused on balance, livability, and sustainability. Centralized planning and zoning control is a key point. All major developments are reviewed and approved by the Sharjah's Planning and Survey Department, ensuring that growth is carefully zoned and infrastructure is in place before the construction begins. This prevents from overbuilding and keeps the community needs at the front and center. And also a strong presence of government-backed developers like the Shuruk, which is the Sharjah Investment and Development Authority, are also behind many of the projects, which means the government has a direct stake in quality, the delivery, and the social impact, not just the profits. And the next reason is the regulations that limit over-speculation. Sharjah doesn't encourage high-risk flipping or extreme price inflation. Regulations around ownership, payment plan, and the developer licensing are strictly enforced, helping to maintain the price consistency. Emphasis on infrastructure-first development is another important point. The government prioritizes infrastructure, which is roads, schools, hospitals, parks, before greenlighting the large-scale residential projects. This creates livable communities and not just high-rise clusters. Also, the cultural and environmental preservation laws plays a huge role in the Sharjah real estate market. Sharjah has specific rules protecting its cultural identity, heritage architecture, and the environmental zones. This ensures that the development aligns with the Emirates' character, which attracts stable, long-term residents rather than the transient buyers. So, what makes Sharjah's real estate market so stable? It's a perfect combination of controlled growth, end-user demand, affordability, and strong government regulation, all grounded in a vision that prioritizes livability over the hype. While global market shifts and other cities ride waves of speculation, Sharjah continues to build communities that people actually want to live in. For investors, home buyers, or even first-time buyers, this is a market that offers something rare, that is clarity, consistency, and confidence. So thanks for watching Everything Sharjah. If you found this video helpful, be sure to like, subscribe, and stay tuned as we're just getting started. See you next time.